Hey traders, Akil here, and welcome to another Forex market preview video. If this is your first time joining me, thank you. Do me a favor, hit that subscribe button. That way you are kept up to date each and every time I put out a video. And that way you also don't miss any of the announcements that I have coming over the next few weeks and the next few months. And if you are a continued subscriber, as always, I appreciate your support. You guys have been doing an awesome job of leaving some very educated comments. I love the shares. And do me a favor, as always, just take a second or two and hit that like button underneath this video. It is great for me. It is great for my channel as far as trying to grow this thing. We're almost at my goal of 35,000 subscribers for the year. And of course, I have much bigger goals down the road from that as well. So I appreciate you guys doing your part. And again, something as simple as hitting that like button and sharing that is a massive help. In today's video, we're going to look at three trading opportunities. We're going to start off with the New Zealand dollar. We're going to go over to the euro dollar, and we're going to go over to silver as well. And right now I'm here on the New Zealand dollar daily chart. And this is actually a trading opportunity that we looked at a while back in the Forex market preview, as price action was making its way down to this level of support. You can see price action made its way off a very nice head and shoulders pattern. We came all the way down across to our next level of previous structure support. Look left, structure leaves clues. And we were looking for a buying opportunity down at this level. And there were a few things that happened. There was obviously a structure-based trading opportunity there. This is called a counter trend trade, as you're going counter to the underlying trend of the market. There was also an advanced pattern formation down there as well. And I remember telling you guys that, hey, I think this is an excellent spot to look for longs. This is an excellent spot to look for, to build out a very good CTS score for you guys that are familiar with that. And, well, I didn't personally have a chance to get involved. Nothing happened down here that met my rules of engagement, so I couldn't get involved. But maybe you got some pips out of this. Maybe you didn't. The fact is now we have technically broken and closed below structure, which means we have to start our analysis process all over again and now look for the next opportunity. And I'll tell you what, this brings up an interesting topic. Let's say you were a trader who got involved down here and this spike had just stopped you out. One of the biggest, I don't want to say mistakes, but one of the biggest errors that I see kind of traders make is judging their trading the wrong way, meaning that if you have a losing trade, I speak to many traders on a regular day, and every once in a while I get an email saying, "Hey Akil, I took this trade. I thought it was a grade A setup, and it met everything in my plan, and it lost. What did I do wrong? Why did I lose? How come this trade didn't win?" And it's important to understand that the markets aren't always going to win. I may be wrong, but I don't think there's any strategy out there that wins 100% of the time. So it's foolish to think that every single time that we execute a trade, it's going to win. And when we evaluate our trade, when we go back and review our trade, hopefully that's something that you guys are doing. We want to make sure to evaluate it based on the execution, the process, not based on the result. So just because it lost doesn't mean you did something wrong. And it can be the other way around. Just because you won doesn't mean you did something right. But when you go through your trading review process, you want to go back through your IPDE, your identify, predict, decide, execute. You want to go back through your ROE, your rules of engagement for why you took the trade, and just make sure that you did everything correctly. And if you did, you got to consider it a good trade. Now you may want to take notes. Hey, I saw this happened, news was here, and maybe that allows you to make adjustments in the future. But you don't necessarily want to beat yourself up just because a trade spiked through. Remember, it's the process that matters most. This actually reminds me of a story yesterday, or a Thursday, I guess it was. My days are all together. Thursday, we had our first match of the year. I play in an indoor soccer league, and first match of the year. I'm excited to be back out there. I'm fresh, and my wife and kid decided to join me for the game. So my kid is 3, so this is the first time that he's seen his dad play any type of sport. So I'm like, okay, well, this is my chance to impress him, maybe score a goal. I can be his hero. One of the benefits of being a father. And I had 2 opportunities. One was a very nice pass right across the face of the goal, and I chipped it back into the the opposite corner, and the keeper stuck a pinky out and made a fantastic save. And then later in the game, I had another one. It was I caught the ball for volley and really tried to chip it over the keeper's head, and it looked like it was going in. It was floating in the air, arching into the net, and I'm all ready to go over to the side where my kid's at, give him a hug, give him a chest bump, and all that type of stuff. And then last second, I see a big paw that comes in, just swipes it away. So 0 for 2 on my attempts of scoring. And after the game, I went to a few of my teammates. I'm not very experienced with soccer. I know soccer, but I haven't played it at a high level. So I talked to these guys who have played on a high level and said, hey, those 2 attempts I had, what could I have done better? How come? What should I have done differently? I felt like I did the wrong thing because it missed. And they said, you know what, Akil? I would have done the exact same thing. If you would have gotten those opportunities 10 times in a row, I would have done the exact same thing you did all 10 times. And the point of that story is sometimes you can do everything right and you just won't get the result that you're looking for. Now, in the bigger picture, right, as you take trade after trade after trade, as I shoot, as I shoot more and more and more, right, the curve is going to balance out, right? You're going to have those winning opportunities, but you can't expect that to happen every single time. So if you're looking at this trade and you got long and maybe you didn't reach profits on it, don't be too quick to beat yourself up and think you did something wrong. Sometimes the market just skunks you out. And of course, if you did make some money down here, congratulations, well done. Now, what I was looking at, again, I talked earlier about switching the mindset on here. What we recently just had is a lower low, lower close, right? So that it's a rejection, a violation, I should say, of this level of previous structure support. And my rules for doing technical analysis tell me that once I see a lower low, lower close, right, I'm now thinking a continuation in that direction. Now, when I looked at this Friday afternoon before shutting down shop for the week, we had a much stronger candle. This is really I would call it a bearish neutral candle. It's more neutral than bearish, but we had a very bearish candle, which I was excited about because that was going to offer a really, really good trading opportunity. This candle isn't as bearish, and we almost came up and closed above, which is going to give me a little bit of hesitation, but we will still have an opportunity here to trade as the week goes on. And as I mentioned before, the lower low, lower close has me thinking, let's do it this way. We go through the IPDE process, identify, predict, decide, execute. So I identify the lower low, lower close. That allows me to make the prediction that price action is most likely to continue lower. And I know that if we continue lower, the next spot that I'm looking for is a move right down here. Let's call it about 67 cent even, our next level of structure. So there's opportunity for me to sell it all the way from about really at market all the way down here. And there's a few different ways we can do this. One of the ways that we've been showing a lot in our live room and showing a lot in our syndicate program is something called the pullback trade. And essentially what that means is this. So we have our previous level of structure support, which is broken. It should now act as resistance. That's going to allow us to mark out a zone on where we think price should reverse at. And our first kill zone, right, our first potential reversal zone is going to be right in here. Now, I'm also going to narrow that down a little bit to look in this area as well. But in the pullback trade, what we're looking for is a pullback into that previous level, or a pullback into our previous level of structure support, which is now resistance, and then a trading opportunity to sell it back down as a trend continuation trade. So if you guys are familiar with trends, right, we extend down, we retrace up, we extend down. You can look at this. We retrace up. We extend down. We're looking to get involved at that next retracement up and then ride the next extension down either to a retest of previous structure or to that lower level of structure that we just looked at. So certainly setting up a pullback trade here on the New Zealand dollar. Again, not as clean as I would have liked, but the opportunity is still going to exist as price action continues to retrace. So this is going to be one of the main trades that we have on our radar going into next week. Now, the next trade I want to look at is the euro dollar. Euro dollar. This is another one that we've been tracking here in the Forex market preview, looking for the head and shoulders formation. I think we talked about this a few times over the last few months. And you can see that price action. Here's our head and shoulders. Let me just draw it out for you guys that are new. If you're new, make sure you go back and watch some of these older videos. It'll make more sense. But we had our head and shoulders pattern right here. we had our break and close below the neckline, and we were looking for a retest of our structure here, and same thing, a chance to get short. Head and shoulders is a classic reversal pattern, but if you take all the funny words away, it's basically the same thing, a pullback trade. And I did take a chance on this on had to be Wednesday or Thursday, and I got skunked out. I saw price action come up here. We had 1, 2, 3, 4, 5 bullish days in a row, a high momentum bullish candle right here, this big green candle, followed by a rejection candle. And this is one of my favorite reversal patterns, this 3-bar reversal, where we get a nice pin bar up here. We followed that with an engulfing candle, and I took a shorting opportunity during the week. Now, unfortunately, that shorting opportunity did not work out. Price did not give me, or the market did not follow what I told it to do, right? Darn you, market, you're supposed to listen to me at all times. But again, it's a great example. I did my review of that trade, and I asked myself, I said, hey, Akil, let's redo the analysis. Let's walk through it. Let's replay the day. Did you do everything correctly? And my answer was yes. So when I jotted it down in my trading journal, guess what? It got jotted down as a good trade. I would take it 100 out of 100 times. It just didn't give me the result, and that happens. And instead of getting discouraged, instead of looking to get revenge on the market or a mistake that many traders make, they just get involved the other way, right? Oh, I'm getting short. Oh, the market went long and stopped me out. I'm going to get long and make it back right away. That often doesn't go very well, but what I'm looking now, I'm just reloading and looking for the next opportunity. I'm seeing that the market had ebbed and flowed, and I'm asking myself, how can I get involved again? Price is still at a level where I should be looking to get short. Nothing has been violated. So what is the next opportunity? And in this particular case, the next opportunity is going to be an advanced pattern formation, right? We can see that price action gave us a move like this. We came down. We did a swing high to swing low. That's going to be our X to A. We then retraced back up. We then tried to make an extension down. We see we didn't get that far. If price action were to come back up, right, we're going to have a potential Gartley formation up in this area. And a Gartley is one of the advanced pattern formations up there. I can actually give you guys a actual number of where that should complete at. Should be right here, a little bit above our 118.38, 118.40 level. What am I reading that right? 118. Yeah, should be a little bit above our 118.40 level right here for a potential Gartley formation. Of course, this could be traded two ways. You can trade this like a normal Gartley where you only look for a brief pullback, or you can use this Gartley formation as an entry reason into the bigger trade, right? The bigger head and shoulders trade. And you can look to ride this down to our lower levels of profit, either right here or right there. If you guys are in the syndicate, just go back to, I think it was Wednesday's video where we talked about kind of the different conservative and aggressive levels that you can use for taking this trade. But you can use this many different ways, and it's all going to depend on you as a trader. Now, I would say this. If you are an advanced pattern trader, and you have no rules about trend continuation trading, you have no rules about head and shoulders trading, anything like that, don't try to get fancy. Don't say, well, it's a Gartley, I'm allowed to take a Gartley, and I'm going to try and get a little extra profit on this one because Akil says so. Bad idea. Do it with demo money, that's fine, but you always want to stick to your rules. You never want to deviate from your rules. So if you don't have anything in your rules about using advanced patterns or taking extended targets with them, don't do it, because, now, if it doesn't follow through and you end up in it, retraces and you end up making no money off of it because instead of taking profits off where you were supposed to, you decide to let it ride, then you're going to be mad at me, and then and I'm not going to care. But you're going to leave money on the table. And that's the worst thing you can do. You never want to leave money on the table. Even a little bit of money earned is better than any money missed. Right? So, don't miss up on profits that you're supposed to take in hopes of bigger profits, unless it's in your plan to do so. Now, speaking of advanced pattern formations, we're going to go to one more. This is going to be silver. Well, this was an opportunity we looked at in our live room on Wednesday. And we're looking at silver. Wednesday or Thursday. All these days get confused to me. But we had a trader ask about silver. And they're saying, hey, Akil, what is silver doing right now? I said, you know what? It just looks like a bunch of junk to me. It looks like we're just putting in a little bit of a wedge pattern. I have no idea which way this wedge is going to break out. You can see this chart is just going completely sideways. I have no idea which way this wedge pattern is going to break out. I said, you know, if we break out to the downside, I'd look for a buying opportunity down here around 1640s. If we break out to the upside, I'd look for a selling opportunity up here around 1816s. And then we looked kind of deeper into it. I said, you know what? This is actually pretty interesting, because if we look at this and we took a Fibonacci retracement, we drew it on, we said, what do we hit here? Well, we don't hit the 618, so that's going to put us on an alert for a potential bat formation. And we know that the bat formation is a very deep completing advanced pattern formations. It's actually one of my favorites because it gives me a very quality risk reward. And if we get that particular formation, it's going to look something like this. This is going to be our X to A, just like the Gartley, swing high to swing low. A to B right here, B to C. But instead of completing right here at our 786, we're going to complete a little bit higher at our 886, which is right under our 18 even handle. And you can see that, right? That completion is essentially in our higher level of previous structure resistance. So if price action were to break out of this wedge pattern, right, we would expect it to retest previous structure highs. Well, and that would offer us a shorting opportunity. Well, now, because I have the advanced bat formation sitting there, I already have a reason to get short. Right? I don't have to wait for a specific entry reason. I don't have to wait for price to do this or price to do that. I have an aggressive way to get short at that level. So pretty cool to put 2 and 2 together. But you can see that we're not just looking for the advanced pattern formation, but as a trader, you can also take your overall analysis of the market and then add the different clues onto it. And that's what trading is really about. It's about being a detective where, you know, we're not necessarily looking for one thing in the market. We're looking for clues. And the more clues we get, typically the better trading opportunity it is. You know, so we're trying to put this together and that together and that together. Fibs aren't very important by themselves. One-to-one measured moves, ABCD patterns aren't very important by themselves. But when you put together a specific scenario of fibs being hit in a certain order, when you combine the ABCD pattern with hidden diversions and stuff like that, then you can start finding some pretty good trading opportunities. So 3 opportunities for you this week. We do have a short week of trading. It is the Thanksgiving holiday here in the U.S. However, it's a pretty active week on the fundamental side of things. So it could be interesting. As we've got a few important people speaking, especially with the ECB and the Fed here. So could be an interesting week, more busy than we think. But thank you guys for joining me as always. Hopefully these 3 trading opportunities give you some insight on how I look at the markets, and hey, maybe give you a heads up of an opportunity that you should be involved in as well. As always, I appreciate your support, so please give this video a share on social media, give it a like, and of course, subscribe if you are new. And I will see you next time. I don't know if I'll be here next Sunday. It depends on the market's movement. We'll see. But again, whenever I post a video, you guys will be notified. So I wish you guys the best of luck this trading week. I wish you guys a happy rest of your weekend. And until next time, plan your trade, trade your plan. Take care.